Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. Over the past few years, mutual fund has grown as a very popular investment category. But when it comes to understanding how mutual fund work, very few people have the right knowledge. And due to this, many people end up making mistake in mutual fund. So it is very important to understand how mutual fund really work. So in this video, I am going to show you how mutual fund returns work. So let's get started. To show you how mutual fund returns are calculated, I am taking this example of SBI focused equity fund direct plan growth. If you scroll down, you can see this option of calculate return. If you click on this, you can see return calculator, SIP calculator. Just click on this SIP calculator. Here you can see that let's say you invested rupees 10,000, then what would be your investment amount? So let's select the SIP start date. Let's say you started your SIP in 1st April 2020 and let's say you ended your SIP on 1st November 2020. So you want to know what is the return you are getting. Here you can see that during this process you ended up investing 80,000 rupee and your value is 97,719 and a profit of rupees 17,719 and that's a 22.15% profit. Now I will show you how did you get this profit of rupees 17,719. For this you need to know the NAV of this mutual fund on the date you are investing your money. So you are investing rupees 10,000 every month in this particular scheme on 1st of every month. So here you started on 1st April, then you invested money on 1st May, then 1st June and likewise till your 1st November. So let's identify the NAV of the scheme on 1st of every month. Let's record this data as well. So just open another sheet and make an entry of month, NAV, investment amount and your final units purchased. So you started your SIP on 1st April 2020, then next SIP was on 1st May 2020 and if you just select these two fields and drag it, you will get till 1st November. So obviously you want it till 1st November 2020. So let's identify the NAV on each of these dates. So if you go back and scroll down, here you can see this bar and here on top you can see the NAV value. So this NAV value keeps changing every single day. You need to know the NAV on 1st April 2020. So if you just check here, you can see the NAV on 1st April 2020 is 125.26. Just record this entry, 125.26. Next your 1st May NAV is, just check here. Here you can see that the NAV is not mentioned on 1st May. So in that case, you need to consider the NAV on the next day. So after 30th April, it is directly showing the NAV on 4th May, which is 133.76. So just note it down, 133.76. Next, you need to know the NAV on 1st June 2020. So let's check 1st June 2020 is 139.57. So just record this 139.57. To reduce our time, I've already identified the NAVs on these dates. So here you have got the NAV on each of these dates. Now what is the amount that you are investing? You have made a SIP of rupees 10,000. So just copy and paste it and just change the format to rupee. There you go. Now you need to know how many units you have purchased. So for that you just put equal to and divide this money with NAV. Just change the format, you don't want this in rupee, just keep plain text. So here you can see that you ended up purchasing 79.83 unit of this scheme of SBI focused fund on 1st April 2020. Likewise, every month when you invest your money, you would purchase certain units. So if you just drag this field, you can see how many units you have purchased. Let's do one thing. Let's take the total of all the units that you have purchased. So your total unit purchased is equal to sum of all these fields and just close it. So you ended up purchasing total of 548.98 units of SBI focused fund. And what is the total investment amount? Your total investment amount is equal to your sum of all these fields. So you ended up investing rupees 80,000. Now you want to know your latest investment value. And what is the latest investment value? It is as of 23rd November 2020. So what is the NAV as on 23rd November 2020? If you go back and check here, you can see your NAV as on 23rd November 2020 is 177.67. So just go back and just mention latest NAV and it is your 177.67. Now in order to calculate your investment value, you just need to multiply your total units that you have purchased with the latest NAV and just hit enter. Now this is your investment value. Just change the format. So it is 97,538 rupee. Now what is the profit you have made? Your profit is equal to your investment value minus your total investment amount. So you have made a profit of rupees 17,538 rupee. And what is the percentage return? Your percentage return is equal to your profit divided by investment amount. So your percentage return is 21.92%. And if you go back, you can see you've got a profit of 17,719. And what we have calculated is 17,538. So we are pretty close to the calculation on money control. The reason for slight difference is because we haven't considered the decimal after 2 points. But I hope you got the idea that how this return on SIP investment is calculated. Now you can see that you've got a very good return on your investment. And why did you get such a good return? Because the NAV of the scheme kept on increasing. The question is, how does this NAV movement work? So basically this NAV depends upon the underlying securities in the portfolio. So if you go back and just scroll down, you can see the portfolio. For example, this particular scheme has invested in 26 stock. For example, it includes your stocks like HDFC Bank, Divis Lab, Alphabet Inc., Procter & Gamble, Avenue Supermart, Kotak Mahindra, etc. So basically the NAV movement would depend upon the movement in the underlying securities or the stock. So if the market is increasing, then the underlying stock price would increase and that would increase the NAV and eventually your return would be good. But if the market fall, then the stock price would fall and your NAV would fall and it would eventually decrease your return. And that is the reason why equity investment is volatile. It all depends upon the underlying portfolio. So I hope with this video you got an understanding on how your return on SIP investment work.